All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session, and happy Friday to you. So we do have CPI today out of Canada, which, obviously I just liquidated all my Canadian exposure. I don't want it. Don't want it. I don't care what the Canadian does from here. I don't want it. I'm more worried that crude oil is going to have a bigger impact than CPI numbers right now. So I'm just just getting out of it done. So I don't have to do. Ooh, sorry guys. So I don't have to deal with it over the holidays. Like I said, excuse my yawning. It's Friday after a very long week, and I could have probably slept another 3 hours today easily, and so I'm just worn out. All right, so let's go over to the euro dollar. Let's start there, and let's get ready for today's price action. Now, remember, we are into thin holiday trading now, and the number of traders that have left yesterday, probably a lot more than you'd think. All right, there's a lot of that explains a lot of the volatility that we saw in the dollar yen overnight, because there's not just a lot of liquidity out there. A lot of these trading desks are left with like assistant traders, and the assistant traders just don't have the buying power or the authorization to get too aggressive in the market, so they have to step away from prices. And so when you have a move like what you saw last night from the BOJ, you're going to get a little bit of an exaggerated move, in my opinion. And those moves, if there's surprises like that, you can see the exaggerated price action you're going to get. It's because it's a holiday, and next week, or let me take that back. This week was a big week for traders, and everybody wanted to make sure they were around for the FOMC. I bet you a lot of traders packed it up and left yesterday. It doesn't matter whether you're in Europe, you're in North America, you're in Asia. A lot of traders packed it up after the FOMC, and they headed off to wherever they were going to go for the holidays. And so even the ones that don't celebrate Christmas, they just know that this is this Christmas week is one where there's a lot of there's less liquidity, might not be around. You may be Buddhist for all you know, but they know that this week is just not going to provide a lot of great opportunities. So anyway, let's take a look at the euro dollar, and what we've got right here is we've got really key support here at the 50% retracement. That comes in at 108. Yesterday we wrote down 108. 108 is key. If we do break below 108, I think 108 is actually the support that we wrote down yesterday, and I think the lows were 108.02 yesterday. So I mean, 108 is support right now. If that breaks, we've got a potential move to 107.30, which will be the 618 right there, right here. But I don't think we need to worry about that right now. We've got this possible inverted head and shoulder pattern. I don't like to look at them at the top of a trend, obviously, but I don't like to look at them while we're doing this. But I mean, it might be able to pull out a move up to 109.50. It's possible. But let's take a step back for a second. Okay. Now, when I talk about the dollar, just understand that when I talk about the dollar, I'm not talking about the dollar yen. All right. So whenever I talk about the dollar, I'm talking about the dollar against the euro, the cable, the Aussie, the Kiwi, whatever. All right. I'm not talking about the dollar yen. The dollar yen is always in a category of its own. All right, and I want you guys to know that it always is. Whenever I say I'm shorting the dollar, more times than not, it doesn't pertain to the dollar yen. The dollar yen is on its own program because of risk appetite, because of the BOJ today, especially because of the BOJ, things like that. But like if you look at the euro dollar and you go, oh, there's an inverted head and shoulder pattern, we could possibly push up to 109.50. You have to imagine that there are dollar buyers looming everywhere. Not in the dollar yen per se, but there's the aftermath of the FOMC raising rates, and it is going to keep dollar buyers, you know, waiting, and they're going to be they're going to be waiting around looking to get into trade. So I would think any move actually up to 109 would be a good area to be on the short side of the euro. Frankly, I think buyers will step in as we approach 109 personally. So I'm going to write that down, 109. We could go higher. I mean, we could rally to 109, and a quarter, 109.50, retest this this broken trend line here. It's possible. Oops, that one. That, pull that back a little bit. It's possible we make our way up here, but I really think any move up to 109, you're going to see buyers. Now you go, again, you're going to ask me, well, Blake, does that hold true with the dollar yen? No, the dollar yen is completely different ballgame, and especially because of the BOJ last night. Yeah, I don't know where the dollar buyers are going to step in to the yen. We'll see if we can find any decent support, which I think it's at 120.20, but we'll go back and revisit that. Let's go over to the cable. So the pound yesterday, it held our support. Remember this? We looked at the 786 retracement at 148.55 as being support. It is the descending wedge support that we've been talking about. We came within 10 pips of that support. So, was I off a little bit? Yeah, probably because I didn't draw this correctly. It probably needs to be drawn like this, right? But regardless, we found some support down there. What that means is that any dip now down to 148.50 is going to be bought. I think that for today anyway, 148.50, well, it's 55, but that'll be really key support on the way down if the pound dips. Now, I'd probably rather play the cable on the short side and go back to this 150 level, as if we get a spike up to 150, that'd be a good selling opportunity. All right. I think that that's actually a better place to be on the short side of the cable, is going to be up at 150. All right, let's go take a look at the Swissy. So the Swissy, I still have a long position. I sold half of it yesterday. If you guys don't know why I sold half of my position yesterday, I'll reiterate. We were coming up to a 38% retracement. Okay, high to low, 38% retracements at parity, right? So we got to 98.85 and I sold it right there. Okay, and I was on the Lunch Money webinar when I did it. So I sold it right there, half of my position. It was also Don in our chat room. He said, hey, Blake, that's 161% extension. We got confluence there. I said, you know what? You're right. So I exited half my position right here at 99.85 or 83 or something, somewhere. Maybe it was right here, wherever the Lunch Money webinar was. Let's see. That was 6 o'clock in the morning. No, right here, noon. It was right here, we were in the 80s, and I said, that's we were pretty damn close, so I'll go ahead and pull the plug on half my position. So I got out of half. Now I have not added it back. The 99.25 that we wrote down yesterday held as support. You can see 99. We're not even coming back down towards 99.25. I think 99.25 is a really big support level. I got asked, hey Blake, with risk aversion making its way in, is it a bad idea to hold Swiss shorts? I don't think it's going to help, but I think a lot of the attention right now is on the yen pairs. So maybe the attention gets turned from the Swiss to the yen. You know what I mean? So I'm hoping that to be the case. Because I still have the Swiss shorts out there, pound Swiss, Swiss yen, long dollar Swiss. So, but anyway, the dollar Swiss, if it can break above parity, and I'm going to put an asterisk here. If it breaks above parity, then it's breaking out. Let's go to the dollar yen. So dollar yen, if you missed it last night, like I said, if you're coming in a little bit late, I was waffling around on whether or not to short the dollar yen yesterday. We were lunch money, and it was like right here, here. We're right here on lunch money, and I'm like, God, we're right up against this fib confluence. I'm like, should I short the dollar yen? I'm thinking about it. I might. I haven't made my decision. But then I realized, I had other, you know, it's like, well, I'm short euro yen, pound yen, New Zealand yen, all that stuff. It's like I didn't really want any more yen exposure. But if I would have shorted the dollar yen, I'm telling you guys, I probably would have been stopped out last night. That move with the BOJ, that would have stopped me out. Um, Obviously, we're down here towards support, and let's remove this. Okay, and let's actually remove this. All right. Currently, let's go to this high to low, or low to high, excuse me, low to high. That's a 786 retracement at 121. 121 yen, there's two levels of support, right? Two levels. Obviously, 120.40 now. 120.40 and 121.00. Those are major levels of support. So both of them. First of all, the 786 here at 121 is major support. Beyond that is this trend line support that comes through. Let's go to the 4-hour chart. Something in my eye. My kids always ask me, Dad, do I got something in my eye? I'm like, yeah, your eyeball. They never find that too funny. I've got something in my eye this morning. It's more than my eyeball. Excuse me really quick. I got to blow my nose. Okay, sorry about that. So, um, so we have this 121, which is support. Below that is this trend line that's sloping up, and so that means that 120, whatever the low is here, 120.35, huge support. Okay, which we just have it written at 120.40. But if 121 breaks, probably has something to do with risk aversion making its way into the market as well. Okay. All right. Now, as far as resistance goes, now there's a lot of people that are waking up this morning going, "Oh crap, what happened here? I'm long the dollar yen. I need out." So where do they want out, and where are they going to get out? That's the question. I suspect. Okay, this trend line. See that trend line? How important it was? Support, support, broke it, resistance, testing, you know. So that support is going to be at 120, or that resistance is going to be at 122.25. Any move up there, you're probably going to find some sellers now. Okay, any move up there. If we can get a balanced little double bottom, you can see this hourly double bottom. It's exactly where the target would be too, right? Double bottom, neckline. Yeah, I mean that would be a classic move. If we can break above this resistance, I actually might short a move up there. Like if we let me grab a pen. Like if we crack this resistance and we start to rally like this, I'd probably short that at 122 and 22 and a quarter, because that is your double bottom, double bottom extension, right? So yeah, that would be great. Okay, so let's just hope we can make our way up there. And I don't know if we're going to be able to, frankly, especially with equity markets looking pretty weak. All right, let's go over to the dollar Canadian. So we do have CPI today. Let me make sure I don't tell you the wrong information here. So for CPI, we have markets looking for a flat read on core CPI, and CPI is supposed to come in at 0.1%. Core CPI at flat. That is a worse read than last month. So here's the thing: if Canadian CPI comes in any worse than expected, we're going to see 140. I don't think there's anything that's really going to stop that. If especially if the core CPI comes in at like negative 0.1, we're gonna shoot right up towards 140. I don't think that's and then you're gonna have to watch that as major resistance, because it's a big round number, right? Support right now, 139. I mean, it's pretty easy. Oops, 139. It is bullish, right? Any break below 139 will expose a move down to 138 and change. But remember, this is where your really longer-term bullish trend line has to stay intact right here. This parabolic trend line, it's just below here where things get, where you have to imagine that things are going to get bearish. We'd have to drop all the way down to 138.50, basically. Here, let's get rid of this. The ascent has been amazing, absolutely amazing, jaw-dropping to me. All right, and it's a bummer that I'm not long. I thought we would have got stopped up here already. So anyway, see if we can we'll do the Kiwi really quick. So here's the Kiwi. Kiwi is held. What did we have as support yesterday? What did we write down as support? Do you guys know right off the top of your head? We wrote, didn't we write 66.90? 66.90, right? 66.90, yeah. So the low, I mean, we wrote that when we were over here, right? So the low over the last 24 hours has been 66.80. Not too bad. You can see this trend line, how important it is. That means that 66.80 now, super duper, pooper scooper, important. If we break, and we're only 25 pips away, so I think anybody who's trading the Kiwi right now knows this. especially Kiwi deal, you know, the traders on the deal desk. If we break through 66.80, you have to start looking at Kiwi being on the short side of the Kiwi on anything and everything. All right, in my opinion, not anything and everything, but you usually need to start looking at the Kiwi being on the short, or just being on the short side of the Kiwi. All right, it's a real important trend line that would be broken. Resistance. It's hard. This is a tough call. All right, let's take a quick look. Spike high to low. 38% retrace. Yeah, okay, so the 38% retracement comes in right through here. 67.40. So, I mean, it's not great resistance, but I mean, things are getting really tight here. All right, let's do the Aussie really quick. Okay. So the Aussie dollar, oh man, how about that? How about, I didn't even look at the Aussie this morning. This is the first time I've glanced at it. How about that? So yesterday we were here, right? And I was reading this to you guys yesterday, right? Yesterday afternoon on the Lunch Money webinar. I read to you, Aussie dollar breaks new, right here. Aussie dollar clears 71.60 support. Okay. Aussie dollar cleared 71.60 support, and it is at 71.45 and falling hard. Next 71 cents is next support, right? That was yesterday at 9:26 a.m. Eastern. All right. We hit 71 cents and bounced. Then we were here yesterday on the Lunch Money webinar, right here, or right here, you know. Yeah, we had already hit 71 cents and we were right here yesterday. And I said, man, hey, you guys, this is yesterday afternoon with all you guys here. I said, if it gets back to 71, 60, that's going to be a great short. We went up to 71.55, 54. Well, ain't that special? You see what I'm doing here? I want to stop for a second. I want to talk to you guys about what we're doing. You know, most traders, they overcomplicate this stuff. You know, we look at the same fib levels, the same support and resistance levels, the same trend lines every single day. And if you've been tuning in for the last 2, 5, 8, 10, 13 years listening to this broadcast, you know I just keep it, it's the same stuff every day. Boring. You don't have to overcomplicate things, folks. I know you guys are, probably doing all sorts of crazy, stuff with all your, 3,000 indicators that you have available to you right here, but you really don't need all that stuff. Yeah, and the market's boring is good. That's exactly it, Kevin. Boring is good. Consistency breeds success in the market. It really does. And so be happy that I bore the crap out of you every day. 71 cents, 71.60. I think that's what we're dealing with right now. 71. You guys can make things as complicated as you want. Go ahead. It's up to you. All right. When we come back, we'll do the dollar index, peso, Norwegian krona, Swedish krona. Don't go anywhere. Thanks, everybody. Happy Friday, TGIF. All right, guys and gals, this is Blake Morrow. You were listening to the Morning Edge webinar I am extra tired today. Just really, really, really worn out, man. All right, let's go over. Whoops, let's go over to the dollar index. All right, so here's the dollar index. Let's go over to a intraday chart. Here's your hourly. So at the dollar index, we broke higher out of that wedge and came right back down. So now let's get out of that, and let's take a step out for just a little bit. Hold on a second. Oh, important. Okay. All right. So we hit a 618 retracement in the dollar index. Previous support, current resistance, right? Right. Previous support, current resistance, 618 retracement that came in at 99.30. That is critical resistance for the dollar. 99.30, because it was the 618 yesterday. That's Greg in our chat room. That's one of the. He was warning me that we were hitting that 618 in conjunction with the dollar Swiss, doing what it was doing. So obviously, there we go. Now support. Little head and shoulder pattern here. So support be really key. 98.67. 98.67. Okay. Head and shoulder neckline. Right. If we break through here, then that'll open us up to back down here. I think there will be buyers down there, but you just have to keep in mind that we can set up for that if we do break down. Okay. And with the dollar yen as weak as it is, it's possible. Very. The euro dollar could just sit there all day, and the dollar yen go into free fall mode, and the dollar index will start its way down here. It will. Okay, let's go over to the peso. So the Bank of Mexico raised rates following the Fed. They raised rates, peso dropped, bounced back, and now we're consolidating. So, well, for a Friday, you might get a little action here, maybe. Possible. Look at that. Okay. Key support isn't for a while, but this the resistance and support, not super well. 1710. I guess I'll write that down. We're in a bullish trend, but it can break the other direction too. So 17, because it's a wedge. But even if we break down in the peso, we break lower because this is a wedge. even if we break down like this, you can probably look to get long somewhere down here. Okay. All right. Let's go over to the Norwegian krona. I really don't see anything to do with it. I mean, it's bullish, but it's like, I don't see any like pressing reason that I need to be on the long side of this at the moment. We're just kind of in the middle of this triangle. It looks bullish, but Swedish krona. Oh, look, 840 and 860. Imagine that. Those are the numbers we've been writing down forever. I bought the US dollar Swedish krona yesterday, and I sold it. I might have lost a few bucks, but it was basically a flat yesterday. I bought it, dipped, rallied, and then dipped again. I think I sold it like right at the same price, real close to. I just wanted it off my books. We can write down those numbers, and I think you should just need to stay away from the US dollar Swedish krona until it breaks 840 or 860. Okay, and it's in a range. Okay, your bias chart is done. We're finished for now. Let's take a look at